Now, I know with a traditional lender, a certain amount of collateral is
Yeah.
a requirement, right?
Yeah.
When you profile the kind of person that would come to you and apply for funding, what does that profile entail?
Okay. So good point on the collateral. I think that is the biggest barrier to getting homes. We'll have successful businesses, the money is coming in, but we don't own our own home, right?
Mm-hmm.
And that divide in Miami is growing, especially with COVID. So that's something CDFIs do take into consideration. The standard client that comes to us maybe is making $20,000 in revenue a year. A lot of the times they need some working capital. Sometimes they want to do an equipment purchase or inventory purchase. It's usually a sole proprietor. Sometimes it's not. And for the most part, it's really one person who's doing the loan application. One thing that we like to say amongst ourselves is that you need an advocate for your business. And a CDFI can only advocate to a certain point because we're also a nonprofit and we're also overworked like any person you know in a nonprofit. So a lot of business owners, the businesses that do the best, have someone who's dedicated to helping them with their loan and with their business financials. A second set of eyes, really. But most of these clients that come to us actually don't have the one-to-one collateral that's usually required for a bank. So that can also change the lens and the forms of collateral that we use. Well, if you have a car that you're paying on, if you have jewelry, if you have some cash in a bank, if you have life insurance policy is actually one of the best ways to secure collateral. Because it's a little bit cheaper. You make monthly payments, and there are life insurance providers who actually specialize in providing collateral for an SBA-backed loan.
That's amazing. The life insurance part, I don't think I knew that. That's
If,
a learning curve for me. Um,
if you have a life insurance policy, if you
mhm,
have CDs or certificates of deposits, if
mhm.
you have stocks, all of those can be used as collateral. And they're not the standard collateral that you can think of. But it's important to know that not every lender will consider those as collateral. And
Right.
the most important thing when you're talking about collateral is what's the value of the collateral to the lender. If
Mhm.
you have $100 worth of inventory, but a lender will only take 80% of that value,
Right.
technically, lender, you only have $80.
Right. Right.
Very important question to ask at the beginning.